Alright, it's the weekend. I attempted a live stream during the week, and I think I finally, it didn't work, but I think I finally got my head around some of the software I'm going to be using. There's the OBS Studio software, which you can plug into your YouTube live stream link. So I think I've worked all that stuff out. It's only when you sort of dig into looking into doing some of this stuff yourself you appreciate how complicated it is and how competent, like real, YouTubers are who do it for a living or a hobby, or as an adjunct to, some other business that they conduct, to interact with the public, gain attention. It's mine's never going to be like that. This is really only for my benefit. Certainly so far I've only really been talking to myself, because it's easier and better to do this for myself as a trading diary than it is to type up a document, which is just boring and it gets squirreled away in a folder on my computer, and I'll do it for a few weeks and then just not look at it, not check it. So anyway, silver. It looks ugly, 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 ugly on the weekly. You've got to say that. On paper, this isn't bad because we've got the flat top, we've got the rising trend line, and flat tops usually break to the upside, just like flat bottom triangles, or price formations usually break to the downside. We're back testing this sort of neckline break on the OBV. RSI of OBV. We're more or equally oversold as we were back on the 5th of April, but at higher prices. But what I really don't like is the way that we've touched this pivot long-term 50% fib here at 26.77, and it's been more or less perfect, and we've turned down. Here it was the support for this distribution and it shot down. Here it was wicked into and rejected a couple of times. Here again, look at the way it's the pivot, look at the way it's the wick, it's the body, It get wicked. They run it up through, they wick it, they run it down through, they wick it from the opposite direction, from the underside. Before going down. Here was from the underside before going up. Here was the overside before going up further. So that's, if anything's giving me a feeling of being disconcerted, it's that. I want to see price over 26.77, 26.80 in double quick, super quick time. Otherwise, we may see, a breakdown. We may go to $23. We may go, God help us, much lower. And all the silver bugs will be saying just wait a little bit longer for the next 6 months, for the next year. They've already been saying just you wait for a year now. That's the 3rd of August. We're going to enter August in 2 more weeks' time. So a year they've been saying just you wait, silver's going to 50, silver's going to fucking $150 an ounce, and they've been saying it for a year, just you wait. And here we are a year later, we're still waiting. And it looks like it could be just, a catastrophe, to be honest, on the weekly. But I have bought, because we're at this extreme, and it is the flat top formation with a rising trend line. One has to assume that, trade what you see, that's what you see, it's that support in a formation that should break out bullishly, or normally does. So what have I done? I bought. That's just the logical thing to do. Logical. Let's put this one indicator away on the daily. And there we are. There's that rising trend line. We didn't quite come into, this is not quite, this wick here, this second wick, did actually take the low of this wick. So it's not a double bottom, but the next stage would be below this wick, below 25.52. Into, again, there's a doji candle here that would serve as some sort of fair buying point, the mid-range of which is 25.37. Then you've got these lows here, these lows here, and then down to 22, these lows here, you know, the 11.4%, 22.67 sort of. But on the daily, in spite of this plunge, ease of movement remains blue. This is the thing with these indicators. Either this is a really bad negative reversal, high on the indicator, although there was a high price here, it's just a weird formation. But in any case, price is lower than it was here. Yeah. And there's a lot of energy for the downside. Or this is a monstrous building bullish divergence. Time will tell. Well, we're right at the trend line, and we're under this wick, we're under this wick, we're back into this area here that we've been in before. So yeah, I bought. And if we go down to the lower time frame, still, if we go down to the hourly, you can see just about, it's not actually super clear. Let's try and reconstruct it. So we've got basically that to that. And if we give it a bit more wiggle room, put it on these highs here, this pivot here. So we've got this, and now this. So we're capturing all these key moments of price action in our downward channel. There's a duplicate of this line here, which also captures this top, this wick, this top. So I have reason to believe these are angles of importance, trend lines of importance. So on the hourly, again, we've come under this wick here. It was when we came under here that I got in on MC4. I think one position, and I took another position deeper, sort of around this level, I think, as we approached the end, the lower end of this, the channeling lines. And so I have two positions with reasonably tight stops in this region, in this area, under here. Again, look at that flush. And again, in my mind, before I went to work the other day, I observed, this is why I have these lines and I was taking them out, but let's put them in again. I observed this wedging, narrowing, wedging, you know, declining momentum, and I said to myself, well, gee golly, as long as we stay above 26.23, maybe it'll break up, but it looks, you know, it doesn't look great. It doesn't look great. And it just dumps, look at that. And I actually put limits in. I thought I'd try and, maybe it's because it was so choppy, it's been fully cleared out, and so the only area that hadn't been cleared out was down here. That's the thing, I'm pretty sure. Yeah, so I thought it'd be clever and try some trading on limits. So I had like limits, like small limits under these wicks, and then bigger, and then bigger. All with reasonably tight stops, but you know, the idea of you'd get some reaction to the upside, you might pick up something. But even, I think I actually forgot to set price targets, but even if I'd set pretty small price targets, just like, you know, yeah, I don't think it wouldn't have worked out. And I would have lost money. Anyway, but you can see that was the wrong thing to try and trade on limits because of the, again, the choppy price action means, you know, anyone that wanted to have orders in these areas is, you know, it's been done, it's been cleared. This is why we sliced right through it. And I kind of noticed it unconsciously, but I just thought I was more thinking about I want to try and trade more on limits rather than trading on my phone when I'm at work. Preset limits the night before. Yeah, that was a mistake though, in retrospect. But going in here was definitely the right thing to do. Regardless of how that trade works out, obviously it's the right thing to do. That is just, as far as I can tell, making good use of available opportunity in like a technically sound place. So yeah, if we go right down, Here you go, here's the 15. So either we do a rapid turnaround, and again, where's my, here we go, my big thick. Oh no, that's the daily. There we go. So this is the line that we must get over to resume up. All the way up here, 2677, we're all the way down here. Yeah, nearly 100 points. More or less exactly 100 points. We could chop our fanny around a bit more, retest it a bit more, and sort of grind up and accelerate later on. But yeah, no, I'm happy with the level I've got in at. We'll see how that develops. Now the dollar, again, you can blame the dollar for this. For going up. And again, you're not seeing that. If I go on the hourly, there's not the inverse of what we saw in silver. There's not like a downward wedge, chop, then broke up near vertically. It's sort of doing its own thing, chopping around this line here, 92.68, 92.69. Slightly falling momentum, turning back before we get too extreme on the upside momentum, but likewise not really breaching to the downside. Nothing really clear, to be honest, I don't think. You can see how it's from the start of July we've just chopped up and down, up and down, up and down, with slightly higher highs, slightly higher lows. So in that sense, it might be bullish, but we're near highs. Now would not be the time to buy. If you'd bought here, exactly on this pivot, that might have been a decent shout. Or down here under these wicks, in line with, you can see, yeah, sort of a pivot area there and there. So that might have been fair enough, but I won't be going long right now. But again, it could go off the moon, because it can do what it wants. It's, you know, it's just you got to trade what looks logical. The euro. You know, it was supposed to be the euro's year this year. You know, we were supposed to be off to $1.60. Well, time is running out for that to happen. We're more than halfway through the year, and we're at $1.17. And maybe this was the move up. There's no more demand here. We emptied out before we reached the old highs, and now maybe we've got to certainly go through this low. Maybe we've got to go through this low. Maybe we've got to come back to $1.14 or 11.406 points on this derivative. Downward wedge, but again, it can break down. You might say, well, gee, downward wedge, you know, falling wedge, break up. Well, maybe. That'd be good for me, that'd be good for silver. But, yeah. There we are in close up. Certainly a move, if you were going to trade on buy stops, a move above 11.827 on the daily would look really good. Let's see what that looks like on the hourly. So 11.827, yeah, that's only here. Like if we got above here. On the hourly, above 11.810 or 809, you could get in there with the stops under here. If I had any more margin on my account, maybe that's what I would do. Much the same. Chop, 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 chop. Alright, well, the pound, the GBP USD, let's have a look at that. Yeah, similar. You got this sort of channel low business going on. You can see between these dual blue lines, I just duplicated another one because it fits. Also coming into this yellow weekly support. Ease of movement is green on the daily. Ease of movement is green on the daily. Or blue, if I hate my other colours. A little bit head and shouldery perhaps, but then again, if we're going to break head and shoulders to the upside, that would be the line to break to the upside. It doesn't look good on the daily, but again, we're in a zone where we would expect support. Yes, we have been rejected here, but we're back at support. Let's have a look lower to get some more clarity. Yeah, we're right back at square one. This is square one of our journey, and we're right back at it. And again, there's the wick low, there's another wick low, and here's further support here. Sort of these extremes, or maybe just you could say everything. Everything in this window. Again, you could say, well, just everything is support. Everything, all the way down here. Come on, let's, that box isn't big enough. All of this is going to have buying in it. You can end up sort of covering things too much. So yeah, this fails. Again, I'll be looking probably further down. I'll be very interested under this wick. Extremely interested, should we come down into this space between the blue and the yellow, or just under the yellow, and then, whoops, accidentally moving something else, don't know what that is. But then if it just kept going, then I'd shit my pants, and that probably cost a lot of money. The bear case is we've seen the rejection here, and that's a pretty good looking rejection. And you'd be looking for a test either, again, from the underside of this blue diagonal trend line, or this sort of these lows, and then further dump. That would be the bear thing to do from my point of view. Now the S&P 500. Now I've actually been taking, just with the little bit left over in my account that's not been tied up in silver, teeny tiny shorts on the S&P 500, which used to be my thing. I spent years trying to short the S&P 500 because I'm fucking retarded. Because again, just like that, in a sense of justice, there's so much wrong, it has to go down. There's so many problems, this doesn't reflect reality, it has to come down. But it doesn't. Justice is not a factor. Reality is not a factor until the very last moment, when it cannot be held at bay anymore through, shenanigans, and even then, there's always plenty of shenanigans and manipulation. Because it's all a scam. Everything's a scam. Everything. So you can't complain. But anyway, these shorts, what I was saying, the point I was trying to say is these shorts are actually working out. I spent a long time trying to short the S&P 500, and as because I was stupid, and I felt in my heart of hearts that nothing ever really got too much better after the 09 crash. It all felt like it was all just papering over the cracks. And obviously it has to come down. But here we are, 10, 11, 12 years later, and we're at extreme highs. So for 12 years, it didn't matter. It didn't matter one tiny bit. But on the odd occasion when I had a few £100, I would try and short the S&P 500. I've been following the markets for about 12 years. I've only been trading for a tiny amount of that because I've been so broke. I've not actually been able to trade very much until the last year and a half. And even then, most of it not. So my actual full-on trading experience is very little. I'm still a reasonable, in spite of the fact I've been following these things for so long and charting for so long, my actual trading experience is not very long. But these shorts, these teeny tiny little mini shorts I was taking out with leftover bits of change in my account, were all working. They were all working. And I do think the S&P needs a breather. I think 4,000, you know, I think at a minimum we're coming back to 4,100. I think 3,800, 3,900 would be a good target, or even deeper. It's fair enough this was a massive pullback here in the COVID crash, but it's just been relentless upside since, and you know, anyone who's been long, it's been too much fun for them. And you know, well, what's really scary is if in points, if not percentages, we were to have a similar magnitude crash. If we were to relive the COVID crash that made everyone shit their pants, we were back at 2,840. Or, in other words, we were back where the stock market was in May of 2019. Oh no, what a disaster. What a catastrophe that would be. The world would be truly ending, just like it was clearly in May of 2019. Unlikely to happen. This is always, moves like this are always unlikely to happen. So, but again, we need, it looks like it wants needs a pullback of some kind. And we've got this lovely little divergence here on the RSI VBB. We've got this here. We made a new high, then we dumped out a few hundred points. And you've got to remember on the daily now, a move like this is sort of, you know, 250, 300 points. So even if you'd only traded like this last half of it, I mean, you made 100 points basically. Yeah. So we'll see. That's a weekly, we'll keep that. That's a weekly, that's a weekly, that's a weekly, that's a daily, okay. That's a weekly. Well, I can't delete them, then they're too important if they're on those time frames. Yeah? Let's zoom in a bit. So with the little bits and odds and ends of loose change I have in my account, I'm going to keep on shorting it, I think. We're under the 14s. We're under this pivot on bearish divergence. And measures of breadth, some of them have taken a turn for the worst. I tend to look at NIAD and NIUD and like the Nasdaq new all-time high lows measure. NAHL, whatever, on stockcharts.com. Some of them have taken a bit of a negative turn, so but I did close out on the evening because again we're back at square one. We're back at the originating point of this move. You know, from these prices we managed a 80-90 point move last time. We're back at square one. So that's why I closed out. Yeah, and look at that. Here's the horizontal pivot area. Here was like a brutal fake out of this channel that was in, then, you know, we've come down, you can see, to the lower end of it. The bottom line is a duplicate of the top. How to make it right though, how to get it to fit. Let's pop this from here now. So more time in the lower part of the channel, less time in the higher part. We can say that now. And of course, where did we reverse? Right in the 60s. Right in the 60 zone on the RSI. Lower price. Higher indicator reading. In a potential bearish reversal zone on the hourly. But here we are, we've come back into our sort of square one, we've taken this wick, we're back at the starting gates. The middle of this. There's a little doji here. That's like the middle of it. So we could go a bit lower. Yeah. We'll be looking to sell bounces. The Nasdaq, similar thing, but look what we hit here. That's a fortnightly, 2-weekly fib channel line. And let's look at the beauty. It was a wick, it was under, it popped through, it held the body, it cut through, and it was re-wicked. It's all just a crazy coincidence. Well, let's have a look on the 2-weekly chart. Where's that coming from? Ah, indeed. So this is duplicated, or is it? I think I've made it fit. I think I've just moved this up in a completely arbitrary way, to be honest, until it fit. Because it does, look! Here's the 11.4, which is the inverse of the 88.6. Touch, over, under, yeah? 23.6, look at this. Over, support, touch, 38.2. It's a top. We go through it, we go under it, we pivot around it, and then the 50%, look, it touches here. Look, it's the top. The 61.8%, we're wicking into it. We define the body. We make a tiny candles under it, we cut through it, we wick back into it. With the top wick, we define the body, we're wicked into. 78.6, we're wicked into. We get a quick turnaround. We define the body. With support, and here's the 8.6. With a top, with a wick. So it's all a bit, that's an awful lot of coincidences if it's just coincidence. Yeah. What's this then? Got to get rid of that. So yeah, so it's similar thing. It looks like it needs a big rest. And that stack does. And anything under here, this again, this 88.6 line. So anything under 14,870 basically. And again, you see the die off in the RSI of OBV. You see, we got a. Yes. So it's messy, isn't it? I was going to say a bullet bearish divergence, but it's just messy. So let's ignore that. Do we have a near-term trendline break? We do. We do have a near-term trendline break on close. So we'll put that in. And we'll go down that time frame. Yep, there we go. There's the trendline break and back tested on the near-term time frame. So it could be very messy, but down overall. It could be chopping and churning rather than vertical down, cascade down. I would feel concerned if we broke up through this. So in a sense, we're at a channel low, and we're under this wick. We've come into sort of square one. But we've kind of already done that here. Maybe this area's been mostly cleared out. Maybe we need to come down more. It really depends. Let's go down. So remember that was the 4-hourly. Yeah, look at that, we're going. That's a potential bullish divergence building here. So maybe this is back at square one sufficiently to get at least a bounce. Or to see resumption of uptrend. FTSE. This is the daily, mind you. And just look at this nightmare. Look at what a nightmare this has been since when's this? April. Everything in this box is just a nightmare. Look at it. You could argue it's sort of floated up a bit, but I mean, it keeps wicking back so deep and then turning. Maybe this is a rollover. Like, if you could have been buying at, good levels in May, April, and you'd have been got out. You'd have been stopped out. Unless you bought like 68 in April, and you'd only moved your stop to 69.43 2.5 months later. Who's that patient? It's not even a very convincing range trade, is it? Again, 100 massive companies. You think would have decent, clear price actions, especially when they're sort of all indexed and composited together. But no, for some reason, things like this S&P 500 always look very good, and the Nasdaq looks very good, and the FTSE always looks very bad. And I can't make head and tails of it. Yeah, you can see on the 2 hourly there's another. Again, we just took this wick low, bullish divergence, so I wouldn't be looking to sell again right away, which is what I've been saying for the S&P 500 and the Nasdaq. You'd want to look for a decent bounce. If you weren't already a buyer, if you weren't already flipped. Treasury bonds. Yep, here's like a zoomed out daily view. So it's all levitated, broke our sort of weird neckline, back tested it, and then all of this was already cleared out. So everything under this wick, and even then this is very inefficient price action. It's only when you really get down into here that you have a basis for saying, there's going to be orders. And we found them, and we've gone up. And again, I was calling for it. Excellent fucking paper trade that I've not actually took. That would have made me a bomb, rather than losing a bomb in bloody silver. But hey ho, we're not bitter. Any more than God made us. It's a nice way to pass the buck on to the Almighty. Yeah. So, broken out of our channel, back test, breakout, and hopefully we stay broken out, I think Treasury tips, the Treasury inflation protected securities have broken out. It would make sense if this follows, and this should be good for silver and gold. Gold is holding up a lot better than silver. Look at this on the 4 on gold. Look at my fucking annotations here. Not main support level, but who knows? Yeah, that was an extreme main support level. We fucking look at that. We barely got into it. We barely touched it. It was under this wick. Everything under this wick was just gold and honey, and these tops. I should have actually drawn my box of, but you get the idea, And look at this. Look at this bullish divergence. Look at this bullish divergence. Yeah, I mean, it's been good for gold. It's been good for metals. Except silver. Silver has just shat its pants. Silver is back down. If gold was at the similar levels, it would be down 1744. It's not. It's at 1811. It's 70 points higher. So gold is loving it, loving it, loving it. And silver is raping me, raping me, raping me. But I keep going back. I keep going back. So I don't call the silver police. I keep going back. And it's just stubbornness. It's just at this point. It's like some of these people have been waiting a year. I've been waiting half a year, and you think, well, is it the sunk cost fallacy, or is it simply the truth in the markets that by the time your patience is worn out and you go away and follow some other asset, that's when it'll take off, and you'll sort of come back and I'll look at my old silver chart that I've not looked at for a while. And then you're like, oh no, it's actually finally done the thing I was waiting for that whole time. Now silver's $40 an ounce. Fuck. Yeah. But there's no way of knowing until well after the fact. Here's the hourly. Yeah, look at these. Triple bottom. Bullish divergence. Under this wick. Back at the starting gate, back at the origin of this move. There's not too much more to look at. Bitcoin. So I took my imaginary paper sells up here, and on Twitter, and yeah, let's just say I would close out whatever was left. I closed like some of it out, like here, 30. I don't know where. It was only a very lazy imaginary paper trade, but sold. So I sold some of it around here. Let's say I've sold the rest of it here. So my fucking Bitcoin trading, and my imaginary paper Bitcoin trades are going really good. And my account is increasing dramatically, and I'm looking forward to the day I can quit my job. And my treasury bonds trading is going so well, you know. I've already quit my job. You know, the money I've made from that, I've fucking, I'm into full-time trading now. But alas, my real trading has been in silver, and that's been a bucket of shit with a bomb at the bottom of it. So, but if I can see the trades and make the trades in these other assets, even if only on paper, surely I can do it. Well, in another asset, if I move to another asset, or in silver, it finally does what I expect it to do. GBP, JPY. I always think if I was going to trade Forex, I'd trade Euro dollar, Pound dollar, and then GBP, JPY. Because the Euro is like the main anti-dollar. The Pound is similar but different and has its own unique features. And has far more movement. And then GBP, JPY, just because it's uninvolved in so much in you know, either it's dollar or anti-dollar, as assets basically seem to be, most assets. It's sort of more its own thing, you know. So that will really give you three bases of trading from, you know, a dollar asset, an anti-dollar asset, and then sort of, you know, something from the planet Mars that is far less connected to all that sort of thing. So you get your three options basically, and that's all you really want. And, you know, rather prominent large non-dollar currency 1 and prominent large non-dollar currency 2 than something, I mean, you know, like, I don't know, the New Zealand dollar versus fucking, I don't know, the Indian rupee, or the Mexican peso versus the Australian dollar, or, you know. But the monster trend, yeah, I mean, horrendously choppy here. This is the kind of action that I've been moaning about in the FTSE. But at least here the range is more convincing. Each time you could have sold the highs, each time you could have bought the lows, and it would have worked out okay, even if the rest of it's a fucking mess. But then when we break up, oh my goodness, you know, talk about making life-changing money if you had held. And you could have just moved your stop up. You know, after this point, even just outside the 14 band moving average, and you'd got all the way up to 1500, 15,000 rather. You know, from all the way back down here. So yeah. Anyway, back to square one. Back to the originating point of this move. We've cleared this out with this, so now under this we're looking to come back into the point of origin around here. If we're going to go there, there's another wick here, a bunch of stuff here, dojis, wicks, and a longer term, what's that, weekly support. So if we go under here, maybe we're coming all the way back down. Something like Bitcoin, maybe we're coming all the way back down to low 14,000s. And there's your downward sloping trend lines. Let's go sub-daily, let's look at the 4 hour. Nah, not massively clear to my eyes. If I'm honest, all you need to know really is We're still on red on ease of movement. These attempts to move up did nothing. Rebuffed. Down, down, down we went. If we stay under 15, 2 to 8, I'd be selling. Is what I would be doing. Look at the bloody dollar basket on the 15-minute again. Look at it. Arrgh, the dollar, the bane of my life. I think we've covered everything. Let's do a slightly more zoomed out look at the euro on the weekly. Because, give me some more units. Give me 1,000 units. There we go. Yeah, because there was an anticipation. Look at this. There's the green arrow anticipation at these lows that it would be off to the bloody races. That it would be. We would be off to, you know, up here. This area had been tested here, so logically the next areas to have come up would have been, you know, 13,000, 14,000, and then maybe even all the way up here. Maybe we'll have to wait till 2022, 2023 for that. But you know, a few too many lines for my liking on here now. Oh, that's not a very good line, though, is it? Not a very good line. But you can see, again, this was meant to be the back test of this sort of downward sloping channel midpoint. You know, here's the upper bound, the lower bound, sort of like the sort of midpoint, and it captures this beautifully. And we got a back test, and it was, you know, you got a good move from there. You know, you got 1,000 points, nearly. No, you didn't. Well, you didn't. You know, 11,800 to 12,200. You got 400 points. But we're back here again, you know. And underneath 11,900, I'm going to say, it doesn't look very good. 11,900, yeah, that's about here. Yes, this horizontal level. So let's see what next week brings. Alright, we'll end it there.